Yes, sir. Yes, sir. Hey, back at it again, guys. I want to make sure I've got some keynotes. I got some information. Hey, make sure y'all stick around to the end of the video. I got a clip I'm about to share with y'all real quick. This is Danny BlanchFlower. Apparently, he was a former bank monetary policy. He was like in the committee. He's over in England, right? Listen to how bad things are getting. This is a global economy crisis that's happening between both powerhouses that shade each other, America and England, both with banks that were involved in this fraudulent game, overextending. Guys, they keep comparing it to 2008, but like I said, guys, I feel like this is so much worse. We about to play the video, and like I said, I got some banger keynotes. I just want to throw in, put some in the air, give y'all something to think about for the weekend. Hey, tomorrow is my birthday, guys. Hey, listen, y'all have made this birthday. It's gonna be something special, man. I appreciate all the support, guys. We're gonna keep them coming, but let's get through this video. Let's go.
John Ehrlichman, we are less than an hour away from the U.S. Federal Reserve's latest decision on interest rates, but describing it that way simplifies our reality much too much.
Day before
it's not
yesterday.
just about whether rates have to keep rising to fight inflation. It's how we are going to deal with this dual reality that rapidly rising rates are breaking parts of the economy while we simultaneously continue to navigate the true challenges that emerge from higher prices. And where will this take us? Where will it take the economy? Where will it take the financial markets? Our next guest was a member of the Bank of England's Monetary Policy Committee during the global financial crisis in 2008. He's also a professor of economics at Dartmouth College. Danny BlanchFlower joins us now. Danny, nice to have you back with us here on BNN Bloomberg.
Great, of course.
So is this the time to be talking about more rate hikes or pauses or rate cuts?
Well, I think it's inevitable that rate cuts are coming. The question is, what are they going to do today? What's the Bank of England going to do tomorrow? It certainly gives me bad memories of what happened in 2008. And I think crucially for your listeners, the big question, I think, is what does the Fed know that the market doesn't? That was really the...
Guys, that's pivotal. I talked about in the last video where, guys, we come out and, we all get this whole spectacular show of, oh, the FOMC meeting, it came out. They already know what's going on. Guys, up under the hood of this car is something wicked. Jay Powell has no idea how to control this. Him and Janet Yellen for the first time in years are just off tilted, even on response. We're gonna go over that at the end. But guys, how do you stop hyperinflation while trying to stop an economy blowing up at the same time because of overextended bad loans of 0% interest where banks just ran money up on money, stacks up on stacks, bad deals upon bad deals. How do you fix that? If the interest rate stops hyperinflation, which hyperinflation, it might even be scarier than that. And that's why Jay Powell made his decision. He's stopping hyperinflation, which sent a chilling sentiment through the market that, we might have pressed this thing all the way through. Man, hold on, I got some stuff to tie in for us, but hold on.
The story in October 2008, we in the UK basically knew that banks were failing. And so 6 central banks on October the 8th cut rates together. And if you notice over the last few days, the same central banks essentially acted together. And by the time we get into middle of November, RBS was in trouble. So the question today is, does the central bank know much more than everybody else does? And if it does, what's it going to do? Is it going to go do a reality check and basically cut rates? But the reality is the market is pricing in the United States 3 rate cuts by the end of this year.
I don't know why.
It's not a question of
I don't even know why.
Really
he didn't mention anything about that in the
meeting. The question is, how bad is it? And what does the
All
Fed
I heard was
see
that future hikes are coming.
See? For example, are there other banks that it knows about that are in really bad shape and bad things are going to happen? So this is really a...
Hello? Did y'all hear that? All right, we're going to tie it in at the end, man. I just want y'all got to hear this now. This is insane.
And I would say anybody,
you know it's bad when people coming out just out the gate like
making an error, and they're going to have to go into screeching
these are former bank
U-turns.
Policy
so that's really
committee
where we are. We'll see what they do.
They know when something toe up. Look at him.
Unclear, but the argument actually for a rate cut is probably the strongest.
So I guess we could have this conversation about what may be known. Maybe we could also have a conversation that's directed towards hubris, because if we had known inflation would be such a problem, maybe we wouldn't have waited as long to fight it. And heading into the collapse of Silicon Valley Bank, we had some awfully hawkish talk, didn't we, Danny, from Jay Powell?
Okay,
so,
like I said.
Yeah. Well, we did. And I think in a sense, if you look back to Waller and Powell especially, there was strong talk about, we know what we're doing, we can raise rates, that's not going to have any implications, we're going to nicely push inflation down, and all's going to be well, based, I call it guessonomics, based on no data. So obviously the credibility of what they've said is now in question.
I tied this all in when we first started talking about this, where the sentiment had went down because somebody told, somebody came in my comments, Swiss Bank is good, they're never gonna. I told him, who told you that? The banks that's going down? Guys, there is no solution yet to what's going on in the current state of affairs. I don't know why people are thinking, they're going to get under control. How can they get some under control they haven't even figured out? Like, are we all in the same universe here? This is spiraling them out of control. And then the thing that you got some people that are short in this market on bad plays, bad deals, on money that might not even be there, as we know. It's like that episode of SpongeBob where all the SpongeBob were running around in his head. Everything was on fire. Listen to the sadness in this man's voice. This is destitute.
The question, partly, of course, is what's going to happen to inflation. But inflation is not really our problem, because as recession comes, what it does is it wipes out inflation. Go back to August 2008. Same conversation, inflation in the fives. What's going to happen? Well, inflation turned to deflation within a few months. So the credibility of the central banks in question, and let's think back, you have rates at very low levels for 10 years, and then in a 9-month period, you say, we're going to raise them through the roof. And that,
guys, they, listen. They were playing on cheat code mode, on God mode. Oh, yeah, we'll get you back with them 8 shares. We'll get you back with them AMC shield. And we'll get you back with them BBYs. Oh, no, we got you on them GMEs. Because they were thinking, we just going to, we could just run it through. The money just can keep coming. And then guess what happened? Right to the kidney. Right to the kisser. Oh, God. Economic downfall, a shift. Somebody started something. And now here you've got people that were playing bad games with 0% interest rate. And interest has now ran up towards where we're at, 5% interest rate? Bond yields expecting are pacing in another 1.25 basis point, 125 basis point hike. That is a difference, a gap between the current economy and the bond markets. Oh God. Guys, I guarantee you the next meeting, inflation will still be higher, as it came in higher the last meeting yesterday. All right, well, let me just have it. I'm sorry.
That's not going to have any implications.
I got some bangers, man. I got some bangers.
It had implications particularly for the high-tech sector, and then for banks that were holding, that were sort of funding them. Well, think now about student loans, car loans, mortgages. What banks around the world are holding those assets? The central bank's going to know, and the question is it going to pretend that everything's fine?
Times worse.
Maybe it isn't seeing such things, but credibility, I think you're right to say, is seriously on the line.
Uncompleted.
And the claim that the soft landing was
and then
coming
it came back.
was based on no historical
that
data. It was guesswork, wishful thinking, and hoping, and now they're paying the price.
So as we start to wrap up this conversation, Danny, you talked about deflation. Bloomberg's economics team went back. They looked at like 140 years worth of bank crisis situations in the U.S. There were some cases where you saw notable deflationary circumstances, but many were before either we were even talking about a Fed being in existence or a different regulatory regime. So maybe we'll see some deflation, but it seems like there's a greater percentage chance that the contraction of the economy comes from first what was an interest rate risk. We've seen that with the collapse of Silicon Valley Bank, but now this worry about a credit risk from all of these bubbling things. What would be your advice to the Fed on how to navigate through and avoid that worst case scenario?
Look at him. Look at him. Well, this is bad. He knows something that we don't know.
And assume that the risks
and
are
they know something that he don't know.
In fact, I know that the Bloomberg's looked at data.
Matter of fact, he was in the committee. He knows.
150 years in the US. We have data for the UK from 800 years. Don't even ask. But about 350 of those years were deflationary. Remember, what we have here is basically nothing which has historical precedent. Since 1945, we have to look to longer time period. So I would say to the Fed, you have to be cautious.
Was that the Great Depression?
The expectation is that this is a severe financial shock on top of the interest rate rises that you've given. Torsten Slok has argued, sensibly, I think, that this is probably equivalent to 150 basis points of tightening just because of what
I just said, look,
what's happened to the financial markets. It's costlier to borrow. Bondholders who were wiped out in Credit Suisse, they're going to demand higher rates of return. So this is a tightening of financial conditions. The Fed really has to sit there and say, okay, what have we done? Just like Janet Yellen is having to do now. She had to rescue the depositors at Silicon Valley and is now talking about basically ensuring every deposit in the United States, which is going to have implications for Canada and for the UK and for Europe. If all the deposits are guaranteed in the United States, well, you're probably going to have to do the same thing. There's
only so much money in the world.
This is tiptoe very carefully and be mindful that the risks are to the downside that you may have caused. Raising rates is likely to make that worse.
He's talking about America. He said you. Guys, this is so bad.
Yeah.
Oh, my God. All right. Hey, listen. Let me get over these notes. I got some keynotes. Hey, I appreciate everybody that stayed to this point. Hey, I love all the support. Let's get down these keynotes, guys. First off, let's start it off with this. UBS is trying to pull out of the Credit Suisse deal. Most likely, like I said, due to all the bad paper deals, mortgages, and then bad bets. Guys, they were buying the bank with the precaution of not losing any money. They came with contingency. We're buying the bank for $3 billion. It was a $70 billion bank. Hello, nobody will buy it but them, a mega bank. It was $3 billion to buy the bank. Then they were guaranteed if they lost any money that they would be bailed out. Guys, they looked up under the hood of that car and they trying to run for the hills. Oh my God. Oh my God. Let's pull it back here. Everybody should have been hearing about this now. TradingView and a few other exchanges continue to have glitches on the market cap, showing AMC and APE above 400 billion and the free float in the trillions. I put down on a side note, that's just because computers can't lie as well as humans. That, guys, it's something short-circuiting, and it's been sitting up there for days. Now, at a certain point, we got to say, oh, wait, is somebody gonna call them and check and see, is this accurate? Like, because they haven't said it's a glitch. We're just assuming it's a glitch. But no, guys, this is how many. Y'all know how many times this free float's been shorted. They tried to hit. They hit it yesterday. They hit it today. That thing's shooting up like this in the morning, and then they're trying to ladder attack. Oh no. I've seen this before. All right. I want this keynote off the FOMC meeting, guys. Just understand the 25-point basis was coming in as a light basis hike, guys. The inflation came in hotter. Jay Powell wanted 50, but 50 would have just 50 would have sent this thing up in flames. Coming down here, last 4 months of inflation have been increasing. I just want y'all to have these keynotes so you understand the current state of affairs. Don't let media just sit out and say a bunch of bull crap in your face and y'all start feeling, no, this is bad. We're going to come back through. Jay Powell finally admits there was an incoming recession in that FOMC meeting post number release. Remember now, we weren't in a recession. Okay, now we're in a recession. All right. There's massive market fusion. Like I mentioned, the bond yields were pricing in a 0-point basis. The people for real thought that Jay Powell was going to come in and hold it. He was like, do you see how bad this is? Oh, yeah, you're surely going to hold it. The banks, guys, this is what they were betting that they were going to get bailed out. That whole thing where we just going to print money, banks will get bailed out, Jay Powell ain't with it. Jay Powell ain't with it. And Janet Yellen ain't with it either. Janet Yellen ain't with it either. Now, hey, putting it back in here. I said they just got slapped with a 25 basis point, and Powell was saying they are likely to bring more. Like I said, and I keep alluding this because I just want y'all to see the temperament. The government knows something that we don't know. Clearly. I mean, we already know that. But is anybody picking up on the panic and the you guys and this and we're in the UK and where it's pointing now? These are government officials. He's retired. So now he ain't got to play the charade. He's just like, what have you done? At the end of that video, he was you guys and what you have done. Now coming back, banking sector is in trouble. Back in smokes again. Everybody was thinking just because in 2 days of, it's rallying, market makers trying to make it go up. Guys, the banks are toast. Back smoked again today. Bringing it on down. A keynote that should be a player point for Ape and AMC, but understand that we are in a whole nother game. We playing real tournament ball. But Apple plans to invest $1 billion a year in the movie productions and cinemas. This is going to be a direct correlation with AMC being the largest cinema house. If we make it to that point, when I say if we, retail can be fine. If AMC makes to that point, that would be something to where we're starting to slowly destroy that short thesis. Same with how GameStop has reversed the short thesis, and that just puts a knee on necks. That's where the knee on the neck happens. With GameStop, but then they look how they be trying to hold it at that 40. Somebody stop that. Why would it blow up 40% and stop? Building up as smooth. Did y'all watch that GameStop chart? That's what a strong movement is. Just holding at 40%. Like I said, this is just a overall show of what the temperament is. This is a harsh, money dry environment. This is exactly where you needed bad bettors, people that had infinite money, it seemed like to be. We have got them on their heels. Guys, this is unprecedented, like he said. This is not like nothing of before. They keep saying 2008 because 2008 was the closest example. Guys, 2008 is only a portion of what's going on now. The credit crisis is just now piling up. We were burning up through money and all that before we even got there. Oh, no. All right, let's check this out here. All right, cool. Got that done. Now I got one last thing to point in on, guys. I said to keep your eyes on the SEC bringing the case against Coinbase, which is a crypto hub with no basis. They are basically looking for a reason to get in the crypto space and start regulation. Guys, it's like a New York police officer. No offense to any New York police officer, I ride with you. But just how they showing the videos, just pulling up and trying to, basically any police officer that's got bad intent, let me just put it like that, pulling up on you and just trying to start something to, hey, what you got going? Just trying to look for something to even just start the scenario. I want y'all to tie that in, but keep in mind now that the three banks that started this bank run and collapse first were all three massively crypto invested banks. It didn't start from a lack of money or liquidity. No, but it started from a tweet from which started pandemonium and triggered a bank run. Now, I said, who sent out that tweet? Or who paid who to send out that tweet? Because it's mighty funny how the dollar like it's going to be obliterated. Unfortunately, but the government now is pushing out the CBDC. Hey guys, look at quick as hell, and now trying to move into the crypto space, start regulation. Guys, if y'all aren't looking at the timeline and looking at what's on the writing on the wall, guys, this is serious. We're in a serious zone right now. Our squeezing our money is only a portion of this whole thing. Once you get your money, you need to be allocating, moving. This is time to be XRP, Tesla, Nvidia. You need to be buying in those strong base, futuristic companies that are going to be taking over. High in cash. That's where you need to sit. All these small companies are going to get obliterated going through this, what we're going through. I don't want to say it, but I'm feeling like the Great Depression 2.0. But nonetheless, hey, y'all. Hey, I appreciate y'all tapping in. Retail, we are here. We are getting more informed, we're getting quicker, we're getting better with our trades. We're not falling for the gimmicks, and we're able to get more and more access to true information. Y'all, we in this together. What they say, together, strong. That's what we're doing. Like I said, guys, tomorrow's my birthday. I'll be turning 28. I appreciate y'all boys. If y'all enjoyed this content, give me a subscription, a like, and like I said, hey, y'all have made this this is gonna be my best birthday so far. I can't lie. I just to finally feel like you're moving to a hub or how would you explain this? Able to connect and kind of voice off things that I feel all the time. I've been sitting back here for the last 2 years just screaming behind a computer. I bet much like you are, as I'm seeing in the comments. But that's why I want this to be hey, guys, this is a retail hub meetup. This is where this is a meetup here. Go down in the comments, put your opinion, say what you know. If y'all find some information, brother, put it down in the comments. This is where people need to be enlightened. We need to come in here. Y'all stop by this hub, that Money Montgomery channel. You gonna step into, all right, let me catch another. And then also, if you need a laugh, you can always look at my shorts. And then I post, I think I'm posting maybe once a week. I'm gonna try to do like every Sunday a reaction video or something. Just something lighthearted. Because like I said, guys, you sit up in here and look at this right. This right here is weird. This is doomsday type stuff. For real. Like, this is, we're setting up for doomsday type things. So like I said, sometimes you need to have a break and release. That's why on my weekends, I got to go out and get me a beer. You sit through the week and you're like, holy hell. We were sitting up here expecting and saying it. Everybody, what the hell? We've been screaming about it. And now you're watching this play out. Guys, there are repercussions to everything. The repercussions are starting. Hey, baby, I appreciate y'all. I love y'all. Hey, y'all stay up and get ready. I'm going to try to release another video too through the weekend and get prepared for the next week ahead, guys. Like I said, this is about to get wicked. It's getting wicked out here. Y'all boys stay safe. Yes, sir.